Hello and welcome to RealityFuturesTrading.com. In today's video, we're going to be talking a little bit about using the new Trade Manager as part of your futures trading strategy. One of the things I wanted to talk about real quick before we get started here, I don't know whether you guys know this or not, but I'll tell you, a lot of the videos that I do and a lot of the stuff that I write about is actually inspired by emails that that I get from you, people that are signed up for the blog and loyal followers, and thank you very much. Anyway, I got an email from a guy named Tom over in Germany today, and Tom is a part-time trader, and he is able to trade the whole U.S. session. However, some of the problems it appears that he's having is it's finding the right strategy for him, and he's given me an account size, which I'm not going to talk about that. But he doesn't want to risk any more than $100 to $150 on any of his trades. Well, this is kind of a two-pronged question, if you will. A lot of what you'll risk may be based on the type of futures trading strategy that you're using, but more importantly, your risk is based on how many contracts and the the size of each tick for each instrument, and so on and so forth. So what I'm going to do in this video here is I'm going to give a couple of examples, and also going to show you a little bit how Trade Manager works and just how easy it is and how it helps take the guesswork out of your risk management. So let's go ahead and let's get started. All right, seeing how this video is, Tom, this one's for you. Let's go ahead, let's get started here, and let's go ahead and take a look at what Risk Manager can do and how it'll take the guesswork out of what you're actually trying to do. Now, you're probably asking about the strategy itself. Right now, I'm showing the Eagle Trend Trader. Now, this is one of my personal favorites in the DTS day trading signal generator aviary. But I'll tell you, we have two others as well. We have a micro scalper and we also have a swing trader. But I'm going to work with this one right here and just give you an example here of how to control your risk. So right now, my account is basically, it's based on a $20,000 account, okay? So right now, I'm currently got my risk, I've got it set here to 1%. At any given time, I like to risk anywhere from 2 to 4% depending on what instrument I am trading. So I just turned my risk up here on the fly to 2%, and let's go ahead and let's see. Now, we don't have a valid entry here for the Eagle Trend Trader because we've got red bars and we're definitely dipped down into the band. But let's go ahead and let's take a look at a hypothetical trade. So I'm going to set some prices here. And my entry's here at the hash mark at about 48, 49 it looks like. I'm going to put my stop down here about a tick or two below the pivot.
Swing.
And then I'm going to set my targets. And as you can see, well, all right, here we go. If I only want to risk 2% of my account, Trade Manager is only going to allow me to trade one contract. Okay? So it's not so much the size of the stop as it is how many contracts it's going to allow me to risk. Now, in Tom's email, he was talking about basically he only wanted to risk $100 to $150 on each one of his trades. So why don't we do this? Let's go ahead. I'm going to clear this off. I'm going to clear that off, and I'm going to go ahead and I'm going to change instruments. This is the oil market right here, and generally on average I risk anywhere, dollar amount wise, it's anywhere from $170 to upwards of $300 per contract. It just depends on where my pivot's going to be. So let's go ahead, let's change instruments. I'm going to move over to the NQ. Now, the oil market pays, it's $10 a tick. For every penny it moves up or down, it's worth $10. Well, seeing as how, like in Tom's case, he only wants to risk $100 to $150 per trade, let's go ahead and let's move over to the NQ, which is $5 per tick. All right, so now I'm currently looking at the NASDAQ 100 here. Okay, now NASDAQ, it's been a little sloppy today, but what we can do, once again, we can go back and look at hypothetical trades. Here we've actually got a valid trade with the Eagle Trend Trader. Let's go ahead and let's take a look at what a 2% risk would look like. Let's look at this entry right here. Once again, we're just kind of doing some examples here. So let's set prices again. Here's my entry. Here's my most recent pivot. And I'm going to set a target. Again, it's only going to allow me to trade 2 contracts. Now, let's go ahead and let's look at the dollar amounts here. My entry is 27.39 3/4.
Trend.
And my stop is down here at 27.32 1/4. So I've got about a 7.5 point stop. Now, a 7.5 point stop is, if we look at it this way, we'll go 7.5. We're going to multiply that times $20 a point, and that's going to get us $150 risk on each contract. Now, if we multiply that by 2, it's going to be a total risk of $300. Well, here's the thing. We're within Tom's range of what he's looking to do as far as his risk amount, okay? I've definitely hit the $150 mark per contract. Now, Risk Manager tells me that if I'm only risking 2% of my $20,000 account, that I'm well within my parameters. So hopefully you guys are getting this as far as it takes the guesswork out of how many contracts in relation to risk, so on and so forth. Okay, as I mentioned earlier, we can also change our strategy if we want to tighten our stop up. Okay, so what I've done here is now you're currently looking at the Hawk Micro Scalper. What I'm going to do here, I want to wipe out some of this noise, so I'm going to move in here and I'm going to go into my data series. I use the Hawk with anything from a 6 to an 8 tick mean Renko bar, so I'm going to go ahead and I'm going to click apply. All right, and there we have it. You can see that it takes a little bit of that noise out of there. So let's look at this trade back here. Let's take a look at this one here. Now remember, we're using a smaller bar on this, so the stops probably more than likely are going to be a little bit tighter. Okay, now with scalping, we need to bear in mind we're not looking to take as much profit on this. However, you can take advantage of a runner if it presents itself. So once again, I'm going to move over here and I'm going to move my risk up to 2%. Okay, let's go ahead and set the prices. I had an entry here, but the entry would have never filled. Price never reached that hash mark right here. However, I had an entry here. Now, granted, I am on a yellow bar right here, but I did have this nice 1 pullback, 2, 3 pattern here. I pull back into the micro trend line, and there's my signal. And once again, like I said, I like to use the most recent active pivot for my stop. Let's go ahead and we'll set some targets out here. And there we have it. So I'm going to move this off here to the left. And now what you can see is, because we've got a smaller stop here, Trade Manager is telling me that I can trade 4 contracts. 2 of them are going to come off here on my first target. 1 is going to come off on my second target, which doesn't look like I would have reached that. And then number 3 is actually going to be my runner. Because like I was saying in the blog, let's face it, guys, what? We really don't know exactly where the market is going. And regardless of how good our futures trading strategy is, really all we can control is our risk and the number of contracts that we trade. So, all right, well, that's going to do it for this video here. Sorry it was such a long one. If you guys have any questions whatsoever regarding futures trading strategies or the newly enhanced Trade Manager, please don't hesitate to contact me at ray@realityfuturestrading.com. Thanks and have a great day.